Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your metals market update. And this is for Tuesday, the 5th of February, 2019, about 3:15 p.m. Central Standard Time. We're just getting ready where the stock indices will stop trading in a moment here, and then we get that 15-minute of waiting to see what goes on. But as you can see, the metals very mixed going into tonight's State of the Union. After that's through, we'll get another idea as to what the president does or doesn't do about the border wall. The word is already that tonight will not be the night he's going to declare a national emergency, which makes sense because he gets to see what the House Senate committee's got to decide by Friday. Is they got to print up the papers, got to have their members vote on it next week so that they avoid the 15th where the president's threatened to cut off funding. I don't know that he would do that anyways. A lot of unknowns. But the stock market seems to have held on. We've stalled in the metals, and that's about all you can say. The dollar got a bid today at the expense of most foreign currencies. A surprise, because I thought the dollar had been in a downtrend, and on the daily charts it went back to a neutral territory. I'll show you that in a minute too. If you take a look at your weekly chart of closes, you're still on a tear to the upside. Yes, you've backed off from the highest close. So what? $2.50? You're down $2.70 for the week? Still looking pretty good. The chart action is that of a pause. You can almost draw a chart line down there, and I don't have a chart line yet I can draw to the upside. I do have this though. I've got a pattern of higher lows and higher highs. That tells me that if the bulls want to keep control of the market right now, they use this part as the pause. If it takes out 312.70, what would happen on this chart is you'd suddenly have lower highs, lower lows. You don't want to see that if you're looking for an uptrend. I say uptrend because the bias stays up unless you close back under the 18-day moving average of closes, which is 1303.70. So yes, the bulls still have control of the market. Problem is we've gone into a pause from this high of 1331, and we're back here about $12 lower, but that's a pause. The other thing that also happened is, you know, that the market, and I pointed this out, had gotten ahead of itself, closing that many days over the upper Bollinger Band, and it has backed off under that. In terms of that part of the market, this is still healthy. What I wouldn't want to see is the 1312.70 taken out, and I can't get away from the fact that the market is just staying overbought. So I have an overbought market that tends in gold to have a problem in the latter part of February and starts slipping back. Is this year going to be a difference? I don't know, all right? There's the big Chinese trade deal. What is that going to do for the dollar? What's that going to do for the metal markets? I can go on and on. There's a lot to be concerned about there. Now, you're still overbought in GLD, the popular gold ETF. You can see the readings. They're not both going sideways over 80. Like the gold futures, you have the pattern of higher lows, certainly the higher highs. You've backed off after spending several days over the upper Bollinger Band on closes, and this is the pause. Like the gold futures, if you take out 123.82, you set up, at least in that moment, the pattern of lower highs, lower lows, and it could mean you're going back to 122.72 to regroup. GDX, I knew I was on the wrong chart there. You're still in the pattern of higher lows, higher highs. You don't want to see 22.16 taken out. If that's taken out, that's a pause pattern. Here's what's good about this chart. Notice that both numbers are over 80. Both numbers were over 80 yesterday and both the day before. Unlike these other charts, until that red line turns under 80 on a closing basis, the breaks in this market are probably more attractive on this chart than they are on the other two. And I will stay in the bull camp until that event occurs. The gold-silver ratio, what it did is, I consider this an important number. It's almost like a zero line. Markets like to look at that. When they get above it, they pull back to this 18-day moving average of closes. They got under it, and they pulled back to it here. Here you can see that the market finally peaked out, and that was your big drop. You just overshot it a little. Now the question is not to take out these highs. If the silver is going to gain on gold, and metals as a group are going to come up, often that ratio doesn't go back up like that. It starts going the other way. That's what history has shown me. Doesn't mean I'm right on it, but that's how I interpret it. So I think we're at a juncture here, an important juncture right now. Silver is still bullish. It's got the higher lows, higher highs. It is in a corrective mode. It is trying to correct right now out of the overbought condition, doing a better job of it than actually the gold market, which has more to go. So right now I'm looking to see how key support against the 18-day average and this last break low, if they're attacked, hold up and what goes on there. Could the market just rally? Of course, but it would stay overbought. In the copper market, you've got this momentum building, and obviously the copper is doing what? It's applauding. Let's get something going in U.S.-Chinese trade talks. If they do that, with the copper deficit being projected this year and next year in terms of production versus usage, and then you get the economy that could use even more copper if good things happen. Just think of electric cars. People have to understand how much more copper you use in an electric car than you actually do in a regular car. And you start putting it all together. But bullish trends, support, becomes now where the resistance was on the way back, the 100-day average. Is the market going to embed? Well, today you have both numbers over 80, yesterday both over 80, and the day before. You're there. So on the pullbacks in this market, like in the other markets that I'm talking about, silver, I still see this market doing okay. In the platinum market, you're at a resistance point, the 100-day moving average of closes. Yeah, it could go further, but like it did before, it probably has a lot of resistance right against that upper Bollinger Band. If you really look, we've been going in these Bollinger Bands sideways for now since the beginning of the year, 2019. I still think the strongest of all the metals is the palladium. It's in the uptrend. Yes, it's against the upper Bollinger Band. And no, I never say buy over a Bollinger Band or sell under one. I'm just saying that what I'm seeing, momentum up, bias up, trend up. This has been the powerhouse. And today, I was disappointed. I was hoping the dollar was going to fail here and start down again to get into a trend that we can talk about. Instead, what the dollar did today is it rallied. So now you have that higher high, lower low. On pullbacks, theoretical support could be the 100-day average in the 18. But I don't see the pros stepping in one way or the other. You've stepped out of the trend. Momentum is up. Bias is up because you're over that number, but you're not trending with the pattern of higher highs, higher lows. You know the president speaks tonight. When he speaks, what's going to happen is the markets will either say, it's a non-event, or he'll say something to tip them off. We also have the period now where the government's reopened, and we're getting today a number of commitment of trader reports. This week, if you're a grain trader, we get a bunch of reports there, and obviously they're catching up on all our regular data. We're going to be writing about that, bringing you up to date, and do it every single day, and it goes right into your email box. How do you get this? Well, if you're an account of ours, you're entitled to it absolutely free, and we give it accordingly. If you're not, you should be with us. If you take a look at our phone number here, give us a call. We'll give you a trial to it. You can come onto our website, see that as well, and you can click up here to get to it one more way. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.